Hey everyone, happy Thursday, January 30th. It's about 10 a.m. on the West Coast, and it's time for another market update. Yesterday was an important day. The Fed made their most recent rate announcements, and then we also got a ton of housing data this week. So let's get right into it. Like I said, first thing, the market mover, the biggest headline of the week was yesterday. The Fed concluded their most recent 2 day meeting, and they decided to keep rates where they are. So they paused. That's what the markets were expecting. There was a 99% chance that's what was going to happen. So really, the only drama going into this would be, what their statement would say afterwards that they always release, and then what they would say in the press conference afterwards. So the statement had some language missing that was in previous statements about inflation making progress, and that kind of spooked the markets for a second. But they were also a little bit more optimistic for our end of things as far as labor goes. So the markets got a little spooked about that statement. But then a half an hour later, when Chairman Powell spoke, he made the market feel better, and we basically ended up right where we started. So not a lot of drama, not a lot of movement in mortgage rates, maybe slightly improved by the end of the day, going into it. So that was good to see. The only other thing that came out of it, last week, President Trump had said that he was going to demand the Fed lower their rates. And Chairman Powell said he has not spoke to President Trump. So that was a pretty, not a lot of news came out of that press conference and that announcement. Because like I said, the markets already knew what was going to happen. So at least there was no volatility. Next thing, we got a lot of home sales data this week for December, for the month of December. So we got existing, new, and pending. So all three big reports that come out. So the first one, existing, was up 2.2% month over month, which was better than expectations. It's up 9.3% year over year, which is good to see. And remember, these are closings on existing homes that, ones that closed in the month of December. So these are probably people shopping in October and November. Inventory was down quite a bit, down 13.5% month over month, but still up 16.2% year over year. The month supply is still at about 3.3 months of inventory supply on average, and the normal market's about 4.6. So we're still in a tighter inventory market. Days on market went up a little bit from 32 to 35. And then I saw, looking at these numbers, first time homebuyers was up from 29 to 31. So that's always good. It's always good for first time homebuyers to get in the game. Next one we got was new home sales. So these are signed contracts. People, signing contracts saying, yes, build me this home in the month of December. And these went up too, up 6.7%, or I'm sorry, 6.7% year over year, 3.6% month over month. Medium home price went up a bit, but from my understanding, the mix of homes, there was a lot more expensive homes that signed contracts for. So that will bring the median up. And then the only other thing to keep in mind here is that the reported month supply is about 8.5 months supply, which is a lot of months. But keep in mind, there was only about 118,000 of these homes are completed. So really, in actuality, if you or I wanted to go buy one of these, there's only about 2 months supply. So overall, though, good to see new home sales chugging along, even with higher rates. And the last one, the one that came in negatively, was pending home sales for the month of December. So these people that went pending, hasn't closed yet, but went pending. So these are people more likely, shopping in the month of December. And that came in down month over month, 5.5%. Down, it's about down about 5% year over year. As you can see, the West, region led the drop with about 10.3% down year over year. I'm sorry, month over month. So again, this is probably an indication of how rates kind of went up along this time. So pending home sales were down in the month of December, but 2 out of 3 isn't bad as far as two reports being better than expected and one being a little worse. Next thing we got, so November home appreciation. So these are always a little bit further behind. So going back to November. So we got both the big reports. So the gold standard is Case Shiller. Case Shiller includes everything. That is up from 3.6% year over year to 3.8%. So about a 4% gain. Seasonally adjusted was up about 0.4% month over month. Non-seasonally adjusted down about 0.1% month over month. And keep in mind, this time of year is usually a pretty slow time, or appreciation tends to drop around this time of year. That's why they do the seasonal adjustments, and it was good to see a gain. And then FHFA, which does not include jumbo loans, does not include cash deals, so it tends to be lower priced homes. That dropped year over year from 4.5% to 4.2% because it was a stronger number last year at this time. And then seasonally adjusted up 0.3, non-seasonally adjusted down 0.4. But again, both right around 4%. 4% on a $500,000 home, that's about $20,000 appreciation. So homeowners are still doing very well for themselves across the country. So not necessarily good to see home prices going up if you are in the market, but if you're a current homeowner, it's good to see that strength continues. Next thing, initial jobless claims came in again very low, 207,000. Expectations were somewhere around 224,000. These are people first filing for unemployment. This number continues to be low. Continuing claims continues to be pretty high, but overall the job market is still, hanging in there, still showing strength. So that's not something, again, the Fed's looking at this to see, if these start jumping, better chance the Fed's gonna, think about cutting rates again. Next thing we got today, we got the fourth quarter GDP for 2024 came at plus 2.3%. Estimates were about 2.5%, so a little bit lower than estimates. Which again, it's good. The stronger the economy looks, the more likely the Fed is saying, "Hey, we're not breaking anything. We're going to keep. We don't need to hurry up and cut rates." So this number being a little bit lower was a little bit better for us. So that was good to see in that aspect. Next thing, so the average 30-year last Thursday it was about 7.11 by end of day, and today we're at about 7.05. So not a huge drop, but not a gain either. So that's good to see, especially after that Fed announcement yesterday, because you're always worried that even though the markets knew what was going to happen, that there would be some sort of negative pushback, or again, Chairman Powell would have said something markets really didn't like. So still a little bit above 7. We definitely want things to get lower than that. It'll be nice to see it get back with a 6 number in front. Important dates upcoming. So we have PCE, very important tomorrow, especially since the Fed has kind of changed their language on inflation. The lower inflation comes in, the better. Right now, they're expecting the headline number to go up, kind of like CPI earlier in the month. But then there is some thought that maybe the core number will come in lower because those shelter numbers are coming in lower. So that will be a big one. Any of these inflation reports before the next Fed meeting, March 19th, which right now they got it about a quarter, 25% chance they'll cut, 75% chance they'll stay paused. We'll get multiple PCE reports, CPI reports. I think we get 2 BLS jobs reports. So a lot of data is going to come out between now and then. So we got to hope that comes in our favor. But overall, it's good to see that home price appreciations are, is still continuing to climb for our homeowners. And then, sales have stayed in there even with the higher rates. So there's definitely a lot of demand out there. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, guys. Thanks a lot.